financial world, watching its every single tick. We're going to break down exactly what is happening, why it's happening, and where this critical metal might be heading next.
And honestly, it all starts with this one number, 65 bucks. Now, silver has pulled back just a little bit from its recent absolute highs, but it is hovering dangerously close to this massive, psychologically crucial threshold of $65 an ounce. And you know how this works. When an asset gets this close to a major round number, the whole market just kind of holds its breath. Traders are out there obsessively watching every macroeconomic data point, every little currency fluctuation, just waiting to see if it has the sheer momentum to break right through, or if it's going to hit a brick wall.
Which brings us to the central mystery driving today's explainer. As silver flirts with 65, investors everywhere are asking themselves, is $70 actually still possible? Are we currently watching the market gear up for a massive, historic breakout toward the $70 mark? Or are we simply looking at the top of the mountain right before a painful short-term correction? To figure that out, we really have to look under the hood of the global market.
Okay, part 1. Today's silver price breakdown. Let's look at global versus local rates.
Right now, the global spot price is trading near $2,100 for a kilogram. But remember, the international spot is really just a baseline benchmark. Look at how that actually translates locally. Over in Pakistan, buyers are looking at roughly 582 rupees per gram, while in India, regional rates sit around 255 rupees per gram. You might be wondering, why the massive difference? Well, by the time physical silver actually reaches a local buyer, the price gets shaped by local exchange rates, local demand, dealer premiums, and of course, taxes. So the international spot is your starting line, for sure, but your local dealer ultimately dictates the final reality.
Moving on to part 2. Why is silver so strong right now? Let's talk about the real drivers of this demand. Silver actually has a very unique dual nature in the global economy. On one hand, it's a financial safe haven, right? It's a precious metal that investors absolutely flock to during global instability, periods of high inflation, or currency devaluation. But at the exact same time, it is a highly critical industrial commodity. Fun fact for you, silver is literally the most electrically conductive metal on Earth. It is utterly indispensable in modern electronics, solar panel tech, medical devices, the whole shebang. So you basically have two massive engines firing at once, safe haven demand and green tech necessity. When both of those demand sources are running hot simultaneously, the price naturally just surges.
That takes us right into part 3, the US dollar connection and the macroeconomic forces at play. Ultimately, this all comes down to what we call the US dollar inverse relationship. Because silver is internationally priced in US dollars, the two basically sit on opposite ends of a seesaw. If the dollar weakens, it takes more of those dollars to buy the exact same ounce of silver, driving the price up. Plus, a weaker dollar makes silver way more affordable for international buyers who are using other currencies, which then spikes global demand even further. On the flip side, when the dollar strengthens, it creates massive pricing pressure on silver, often dragging the price right back down. The takeaway here, if you're tracking silver's path to $70, you can't just watch the silver market. You absolutely must keep a close eye on the broader US financial system and the dollar index.
All right, part 4. Will silver actually hit $70? Let's look at this psychological target.
The simple fact that it's holding near 65 makes 70 a very real, very intense psychological battleground for global traders. But as we all know, markets do not move in straight lines. It's incredibly common for a strong, rapid rally to be met with a temporary correction. Think about it. Traders who bought in at, say, $50 or $55 might just decide to cash out and take their profits as the price nears 65. And that profit-taking creates a wave of selling, which can easily cause the price to consolidate or pull back before it can ever make a legitimate run at 70. Because of that, if $70 is our destination, the vehicle that gets us there is one thing: momentum. Breaking through crucial resistance levels like 65 requires sustained, heavy buying momentum. A quick one-day spike, that won't cut it. There has to be a continuously supportive macroeconomic environment that keeps both the investors and the industrial buyers hungry for physical silver, even as that price climbs higher and higher.
So how do you actually track that momentum? Well, here is our Rule of 5 checklist that you should be monitoring for the next major price swing. Number 1. US dollar strength, mostly because of that inverse relationship we just discussed. Number 2, Federal Reserve interest rate expectations, because lower rates generally weaken the dollar and give metals a nice boost. Number 3, inflation and economic data. High inflation almost always drives investors straight into hard assets like silver. Number 4, global industrial demand. Really keep a close eye on the tech and solar manufacturing sectors there. And finally, number 5, geopolitical and financial market uncertainty. A major surprise in literally any of these 5 areas could trigger incredible volatility and instantly dictate silver's next big move.
So we've seen the global prices, we understand the dual engines of demand, and we've got our 5 key indicators locked in. Now it's kind of your turn to make the call. Are we on the verge of a historic, unstoppable breakout straight towards $70? Or are we staring down the